Welcome back to Roxham TV. I'm your host, Jemmy. We've got a packed show today, and honestly, there's one theme connecting almost every story we're covering. So that's power. Who has it? Who is losing power? And who is trying to take it? Because while Bitcoin is fighting to recover from one of its biggest sell-offs of the year, we are also watching a major shift happening across technology, AI, and global markets. We'll start with breaking news out of the Philippines, where the strongest earthquake in 36 years has left dozens dead and hundreds injured. We'll bring you the latest updates and footage from the ground. Then we'll look at something that could completely change the AI race. While Washington spent years trying to slow China's technology sector, new data suggests China might actually be becoming the backbone of the global AI boom. We'll explain why companies like Nvidia, Google, and Amazon still rely heavily on Chinese supplies despite the ongoing chip war. We'll also talk about Apple because, in one of the biggest emissions we have seen from a major tech company, Apple has effectively handed Siri over to Google. The company that once insisted on building everything itself is now relying on Gemini AI to power its next generation assistant. We'll break down what that means for Apple, Google, and also the broader AI race. And speaking of AI, we have a massive deep dive today into what could become the biggest IPO wave in market history. So there are OpenAI, the Anthropic, and SpaceX, three companies, more than $3.5 trillion in combined valuation. So is this the beginning of the next technological revolution, or are we watching the final stage of an AI bubble? We'll spend time breaking down all three companies, including why some analysts believe retail investors could be taking on far more risk than they realize in the upcoming SpaceX IPO. We'll also cover Sam Bankman-Fried's latest attempt to get out of prison after the former FTX founder officially filed for a presidential pardon. Then we'll look at a fascinating AI story. A company called Agnes AI is making its model to completely free to use. So no subscription, no monthly fee, no token charges. Is this the future of AI or a business model that simply can't survive in the long run? And finally, we'll wrap up with some Bitcoin. Did Michael Saylor crash Bitcoin? That's some critics are claiming after MicroStrategy sold 32 BTC last week. But after that drama, MicroStrategy just announced another Bitcoin purchases worth over $100 million. We'll break down what is really happening, why Bitcoin treasury companies continue buying, and whether this latest pullback could actually become a creating opportunities for long-term investors. So anyways, there are a lot to go through today. Make sure to hit the like button and let us know where you're watching from. And let's jump straight into a global news to begin with. So I want to start with some breaking news from the Philippines. So the country was hit by the strongest earthquake in more than 3 decades. A magnitude of 7.8, so 7.8 earthquake struck off the southern coast. So far, at least 19 people have been confirmed dead, and more than 200 others have been injured. Most of the injuries happened inside buildings that were damaged or partially collapsed during the earthquake. So let's take a look at some footage and that has been circulating on social media right now. All right, so that gives you an idea just how powerful this earthquake was. What's especially concerning is that today was the first day of school for many students. During the earthquake, classrooms started shaking violently as teachers and students rushed to safety. Thankfully, early reports suggest there were no major injuries at school shown in this footage. So let's take a look at this right now.
Bantay mo, anak. Bantay mo, di ate. Lingkod lang, lingkod lang. Lingkod lang.
So the danger didn't end with the initial earthquake. Several strong aftershocks followed, including some measuring as high as magnitude 6.5. Those aftershocks continued for more than an hour after the main quake. Authorities also issued tsunami warnings shortly after the earthquake. So, the Pacific Tsunami Warning Center warned that waves of up to 3 meters were possible. A wave of around 1 meter did reach parts of the coastline before the warning was eventually lifted later in the day. The alerts weren't limited to Philippines. Warnings were also sent to nearby countries, including Indonesia, Malaysia, and also Japan. So this is the strongest earthquake to hit the Philippines since 1990. The country sits along the Pacific Ring of Fire, being one of the most active earthquake zones in the world. It is again a reminder that millions of people across Asia live in regions where powerful earthquakes can strike with very little warning. For now, rescue teams are continuing the search and recovery operations, while authorities monitor the area for additional aftershocks. We'll continue to monitor the situation as more information becomes available. In the meanwhile, everyone here at Roxham TV sends out our thoughts and support to the people of Philippines during this difficult time. So moving on from global news to actually, let's talk about some AI news. Because when it comes to the AI rival, there are two countries that we cannot ignore. So first one being China, and then we have the US, of course. So for the past few years, we've heard a lot about the chip war between the US and China. Washington has been trying to limit China's access to advanced chips and AI technology. The goal was quite simple, so it's to slow down China's AI development. But the latest data suggests something very interesting is happening. So China might not be falling behind. In some areas, it's becoming more important than ever. So according to new customs data, China exported more than $100 billion worth of chips during the first 4 months of this year. That is an increase of almost 84% compared to the same period last year. And here's the really interesting part. In April, the value of chip exports doubled, but the number of chips shipped barely increased. So that is actually telling us something important, that China isn't just selling more chips, it's selling more expensive and higher value products. So for years, many people, when it comes to the view of China, mainly focus on manufacturing center. That is at least the perception of people around the world, like build the products, ship them overseas, keep the low margin work. But these numbers suggest China is slowly moving higher up on the technology ladder. And the biggest opportunity right now is, of course, AI. Every company wants AI, every company wants data centers, and those data centers need a huge amount of hardware. So when people talk about AI infrastructure, they usually just focus on NVIDIA GPUs, but there's actually another piece that is just as important. So this one is the optical modules. So think of these as the internet cables inside AI data centers. They move massive amounts of information between servers using light. Without them, AI clusters simply do not work. And this is where China has become incredibly dominant. Chinese companies now hold 7 of the world's top 10 positions in the industry. Together, they control more than 60% of the global market. One company based in Wuhan recently unveiled a new optical module capable of transferring the equivalent of roughly 100 HD movies every second. And according to manufacturers, order books are already already basically full through 2028. And what's even more interesting and surprising is who is buying these products. The customers include some of the biggest names in American technology. So companies like Nvidia, Google, and Amazon, these firms are spending billions building AI infrastructure, but many of the key components still come from China. This creates an interesting situation. The US has spent years trying to reduce dependence on China, but at the same time, the AI boom is creating demand for products where China has become a critical supplier. In other words, while America dominates AI software and advanced chips, China is becoming increasingly important in the hardware that connects everything together. It's a reminder that global supply chains are incredibly difficult to replace, and in the AI race, the winners might not just be the companies building the smartest models, they might also be the companies simply supplying the tools that make these models possible. Because sometimes the biggest money isn't made during a gold rush, it's made by selling the picks and shovels. Again, it kind of circled back to what Serenity suggested on his X account. All right, so keep diving into the AI world. Right now, we have to talk about another AI giant in the world. So, of course, I'm alluding to Apple. So, for years, Apple actually has one rule: build everything yourself. So, whether it's the chips, or we have the M1, M2, M3, M4, whether it's the chips or software, the ecosystem, that strategy helped make Apple one of the most valuable companies in the world. But this week, something changed, and that is a pretty big deal. At Apple's developer conference, so Tim Cook, he unveiled a completely rebuilt version of Siri. But here's the catch. The brain behind the new Siri isn't even from Apple. It's from Google instead. So Apple has signed a deal with Google to use a custom version of Gemini AI. Reports say Apple is paying Google around $1 billion per year for access. That is a stunning move because for over a decade, Apple tried to build Siri on its own. Now it's turning to one of its biggest rivals for help. And according to the report, Google's model is about 8 times larger than anything Apple has built internally. That is, of course, a huge gap. So you could ask, okay, Jamie, what is this latest Siri? What does it even do? So Apple says this new version of Siri is built from the ground up. It can handle more complex results, requests. It can remember previous conversations. So think of it less like the old Siri and more like the ChatGPT or Gemini living inside your iPhone. So here we have a video posted by Tim Cook on his X. So basically, just an example of how you use the new Siri that is about to launch. So you can take a picture of your food with your iPhone and basically ask Siri, tell me about the nutrition value of this fur that I'm eating for lunch. And so stuff like this. This is just like one of the examples. So for simple tasks, Apple handles the request locally. But for harder questions, Siri sends the request to Google's AI systems. Those requests are processed on Google servers using NVIDIA AI chips. Apple says it removes personal information before sending anything out, and Google is not allowed to use that data to train future AI models. But like this is actually super rare for Apple rather to do such thing. And this isn't just a product update. This is a mission, if you ask me. Back in 2024, Tim Cook promised a much smarter Siri, but Apple failed to deliver. Month after month, the launch kept getting delayed. The company eventually faced lawsuits from customers who believed they were buying devices with AI features that never arrived. Reports say Apple agreed to a settlement worth around $250 million. Now, Apple is finally shipping the product, but it had to ask Google for help. So the bigger story here isn't about Siri. The bigger story is what it says about the AI race. For years, Apple looked like one of the strongest technology companies on earth, but AI moves fast, and even Apple could not keep up with that. While OpenAI, Google, Anthropic, and others raced ahead, Apple struggled to build a competitive model. Now, instead of competing directly, Apple is partnering with a rival. That's something we almost never see from Apple before. There's another reason this announcement matters, because this was Tim Cook's final developer conference as the CEO. So on 1st of September, leadership would officially pass to Apple's engineering chief, so John Turners. And interestingly, the new Siri is expected to launch around the same time alongside the iPhone 18. So in many ways, this isn't just a launch of a new Siri, it's the beginning of a new chapter for Apple. And the company that once built everything itself is now entering the AI era with help from Google. That tells you just how important and how difficult this AI race has become. All right, so we'll take a short break from here. When we come back, we are still sticking to the AI world because looks like there is a serious problem that a lot of investors are ignoring. So we know there are three biggest IPOs about to come. First one is SpaceX, and then we have Anthropic and also OpenAI. However, a lot of investors are being blinded by these big AI name and think that we could just only go up from here. There are data to show that we might have to consider our financial position if we were about to do the IPO for SpaceX, which is coming very soon. So we'll hit a short break for here, and when we come back, we're going to give you details. So make sure don't go away.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxham TV, and thanks for sticking around with us after the break. Right now, I want to spend this entire segment to talk about the most important story in markets right now, because over the next few months, we could see three biggest IPOs in history all happen at roughly the same time. So we have OpenAI, we have Anthropic, and also SpaceX. Combined, these companies are worth more than $3.5 trillion. That's larger than the entire stock market of many countries around the world. The question investors should be asking here is quite simple. So, are these the future of technology, or are they the final stage of an AI bubble being burst? So let's start with the facts right here. So OpenAI has officially filed confidential IPO paperwork. Anthropic filed last week, and SpaceX is expected to go first. This isn't happening by accident. Investment banks have reportedly told all three companies the same thing. Whoever gets public first gets first access to investor money because there is only so much capital available in the market. And right now, everybody wants exposure to AI. And this is becoming a race, not just for technology leadership, but for investor monies. So let's start with OpenAI, AI first. So nobody can deny that the success for OpenAI. I'm sure we could all agree that with that because like OpenAI or ChatGPT changed the whole world. The company reportedly generates around $20 billion in monthly revenue. Enterprise customers continue to grow. Codex is growing rapidly, and ChatGPT has become one of the most important products on the internet. The problem, though, is that OpenAI burns money faster than almost any company in history. The company has already raised hundreds of billions of dollars, and according to reports, it plans to spend around $600 billion on AI infrastructure by 2030. And that is an incredible amount of money. So investors need to ask, can OpenAI eventually become widely profitable? Or is this a company that constantly needs more capital just to stay afloat? Because revenue growth, it is impressive, but cash burn matters too. Then the second one we have to talk about is Anthropic. So the company behind Claude, I'm sure a lot of viewers would use Claude before. And recently, something surprising happened. Anthropic's private valuation actually surpassed OpenAI, and that tells you investors are becoming less certain about who wins the AI race. A year ago, like OpenAI looked untouchable, but today, I hate to break it to you, not so much. Anthropic has become a serious competitor, and the competition is, of course, good for users like you and me, but it creates uncertainty for investors. Nobody knows who the long term winner will be, so that's why we've seen devaluation like this. Now, let's talk about SpaceX though. So, I do want to spend a lot of time to talk about this. And this is where it gets interesting because OpenAI and Anthropic, unlike OpenAI and Anthropic, SpaceX isn't just an AI company, it's a rocket company, a satellite company, and also an internet company, and now apparently an AI company as well. So SpaceX is targeting a valuation between $1.75 trillion and $2 trillion. Let that sink in. Like at nearly $2 trillion, SpaceX would immediately become one of the largest companies on Earth. But the problem, though, is the numbers don't actually match. So last year, SpaceX generated around $18.7 billion in revenue at a $1.8 trillion valuation. That's roughly 100 times sales. So just for comparison, just to give you guys some perspective on that, where's the chart? So right here. So just to give you some perspective on that, Amazon went public at around 4 times sales. Visa was around 3 times sales. Even many software companies don't trade at 100 times revenue. And SpaceX isn't a software company, it's a capital intensive business. It launches rockets, it builds satellites, and reportedly lost nearly $5 billion last year. So naturally, investors are asking this question: how can this possibly be worth $2 trillion? Well, to be fair, there is a very strong bullish argument. SpaceX has an incredible mode, like nobody can match its reusable rocket technology. We know that for sure. Starlink is growing quickly. Governments depend on it. Military organizations depend on it. And if Starship succeeds, SpaceX could dominate space transportation for decades. And that is the bull case. You're not buying today's revenue, you're buying future dominance. Now, here's an interesting question that we have to ask. Like, are retail investors being used as exit liquidity? Like, let's talk about something almost nobody on Wall Street wants to talk about. So, the retail allocation. In a normal mega IPO, retail investors usually get around 10% to 15% of the shares. The majority goes to large institutions, so pension funds, mutual funds, insurance companies, long-term investors with deep pockets. That's important because institutions tend to be more stable holders. They don't panic sell after a bad week. They provide what Wall Street calls sticky capital. But SpaceX is doing something very different. So, according to reports, roughly 30% of the IPO allocation is being reserved for retail investors. And that is doable, exactly, that's double what we normally see. And that raises an important question. Like, the reason why is because when retail gets such a large allocation, so 30% we're talking about, the burden of supporting the stock price shifts away from institutions and toward individual investors. In simple terms, retail investors are being asked to absorb such a large chunk of the risk, a large chunk of the shares. And remember who is on the other side. Like, many early investors have already made enormous gains. Over the last 2 years, SpaceX valuation absolutely exploded from roughly $200 billion to nearly $2 trillion. Now, public investors are being invited at the highest valuation in company history. That doesn't automatically mean it's a bad investment, but it does mean investors need to be careful because the people buying today are paying a very different price than the people who invested 5 or 10 years ago. That's why some analysts are asking whether public investors are funding the next stage of growth or simply providing an exit for investors who got in much earlier. But here's also an interesting and a thing basically investors should understand, which is the lockup period. So most insiders cannot sell immediately. They are locked up for roughly 6 months. That means the first few months after the IPO could actually look great. Well, that's because supply is limited, right? Index funds might be forced to buy, ETFs might be forced to buy SpaceX, momentum traders might pile in, but 6 months later, that's when early employees or venture capital funds or insiders can actually start selling. Historically speaking, that's often where pressure appears. Not always, but often. If you are a long term investor, that lockup expiration date might be more important than the IPO date itself. So, to answer the ultimate question, are we in an AI bubble like everyone is asking since Jeremy, you're suggesting the valuation is not basically the revenue is not supporting the valuation. So, are we in a bubble? My answer, I would say yes, possibly, but that doesn't mean it pops tomorrow. In fact, if history teaches us anything, bubbles usually don't pop when people first notice them. They pop after they become obvious, like look at the internet bubble per se. Like, people were calling it a bubble years before it actually burst. Prices kept going higher, money kept flowing in, and the winners kept getting bigger. The same thing could happen here. Right now, we still have three massive IPOs coming. So OpenAI, Anthropic, and SpaceX. Wall Street wants those deals to succeed. The banks want those deals to succeed. Early investors, of course, would like the same, and frankly, the market probably wants those deals to succeed as well. That doesn't mean price can't correct. We have seen that on Friday, so the Black Friday. We will talk about the TA on previously on Roxham TV. The Nasdaq had one of its worst days in years. AI stocks got crushed. Some investors are already nervous, but one bad day doesn't necessarily end a bubble. Sometimes it's just a warning shot. Sometimes bubbles continue growing for months or even years after people start worrying about them. And sometimes they might actually never pop at all. Instead, earnings eventually catch up to valuations. That is another possibility. The key thing to watch isn't whether AI is real. AI, because we know it obviously is real. The question is whether expectations have become too high. Because when expectations get ahead of reality, that's when trouble starts. My view here is quite simple. The AI story is still alive, the capital spending is still happening, the IPO wave is still coming, but once OpenAI, Anthropic, and SpaceX finish raising money from public market, investors might start asking tougher questions. Questions about profits, question about cash flow, and what about valuation? And that's when we might finally discover whether this is the beginning of a new technological revolution or the peak of an AI investment cycle. So time will tell. I'm not against people trading SpaceX or buying SpaceX right now, but for myself, not financial advice, but I'm avoiding this IPO period because I know it's going to be very volatile. Anyway, so let's shift our gears from AI to I want to talk about crypto right now. So the one of the most controversial figures in crypto being Sam Bankman-Fried. Of course, he is with the crazy hair as always. So right now, so the founder of FTX, right now, like officially a man seeking a presidential pardon. According to records from the U.S. Office of the Pardon Attorney, Sam Bankman-Fried has formally applied for clemency. So, as many of you know, probably know that SBF is currently serving a 25-year prison sentence. He was convicted on fraud and conspiracy charges following the collapse of FTX back in 2022. So before FTX collapsed, we know Sam Bankman-Fried was seen as the golden boy of crypto. He appeared in Congress, he met world leaders, and he was one of the biggest political donors in America. Then everything fell apart. Prosecutors argue that billions of dollars of customer funds were improperly used. When FTX collapsed, millions of users suddenly found themselves unable to access that money. The fallout spread across the entire crypto industry, and that damage was measured in billions of dollars. So, but this, I would say this pardon request, it didn't come from nowhere because, like, almost a minute, not the minute, but almost as soon as Donald Trump basically took office, like he pardoned a lot of crypto people, so that included CC as well. So I would say this pardon request didn't come from nowhere. For months, like reports suggested that Sam Bankman-Fried's family has been exploring ways to seek clemency. At the same time, Sam Bankman-Fried has continued giving interviews from prison. He is publicly criticized prosecutors, and he's repeatedly argued that the public doesn't fully understand what happened. In a recent interview, he was asked directly whether he would accept a pardon, and his answer was quite simple, like absolutely, no question asked. So our next question is can Sam Bankman-Fried actually get one? That is the big question, right? And right now, the answer appears to be probably not. Most recent pardon discussions have focused on cases where supporters argue the sentence was too harsh or where there were concerns about fairness. For Sam Bankman-Fried, it is a different challenge. His conviction wasn't for a technical violation. It wasn't for paperwork issues. Prosecutors described the FTX collapse as one of the largest financial fraud cases in modern history. That's a much harder case to sell politically speaking. So, as for the chances, at the moment, there are no real signs that a pardon is coming. President Trump has not publicly expressed support for Sam Bankman-Fried neither, and no major political figures appear to be actively campaigning on his behalf. That doesn't mean it's impossible. Presidential pardons have surprised people before, but based on what we know today, the odds appear relatively low. So we know he is a very important figure in crypto history. one of the most important chapters that changed the entire crypto history, not because of the pardon itself, but because FTX became the event that changed how regulators, how politicians and institutions view the entire crypto industry. Even today, years later, many of the regulations being discussed around crypto can be traced back to what happened at FTX. So while Sam Bankman-Fried is now trying to rewrite the final chapter of his story, the impact of the FTX collapse is something that the crypto industry is still dealing with today. For now, the pardon request is officially on the table. Whether it goes anywhere is a completely different question. All right, so let me know your thoughts in the comment section below. Do you think FTX founder Sam Bankman-Fried deserved a pardon, or he deserved to be rot in jail for 25 years sentence? So let me know your thoughts. But anyways, we are taking a short break from here. When we come back, we have more AI story because the world is getting inevitable to talk about AI, and that's where the money is. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Alright guys, welcome back to Roxum TV and thanks for sticking around with us after the break. Now, let's talk about something that sounds almost impossible. What if AI became completely free? Not cheaper, not discounted, but actually free. So a company called Agnes AI just announced its text AI, image AI, video AI models are now free for everyone to use. And users showed up fast. I mean, not surprised, right? That raises some important questions. Like the platform said people generated trillions of AI tokens, millions of images, and millions of seconds of video within days. So the question we are asking, why would an AI company give away its product for free when everyone else is trying to charge more? So we have to understand one big problem. So AI is very expensive. So according to Agnes AI, which is like one of the biggest barrier to AI adoption today, is cost. Let's think about it. Every prompt costs money, every image generation costs money, and every experiment costs money. For developers, creators, and startups, those costs add up very quickly. The company's argument is quite simple. So people should not have to think about token costs every time they want to create something, because once money becomes a barrier, people stop experimenting. And when people stop experimenting, innovation slows down. So I'm sure if you guys have used Claude before, you know the token burn is quite serious. So what's interesting is that for this project, Agnes AI, it is moving in the exact opposite direction from the rest of the AI industry. OpenAI charges for ChatGPT Plus, Anthropic charges for Claude. Google charges for Gemini and Microsoft charges for Copilot. The point being, everyone is trying to monetize AI. Meanwhile, Agnes is basically saying, come use our models for free. And that is a very different strategy. And it could either be very brilliant or very expensive. Naturally, people are asking this question, how can they be doing this, right? Like, how do they give away AI for free without going bankrupt? The company says the answer is efficiency. So instead of building the absolute biggest and most expensive models on Earth, they focus on building models that are good enough for most users while keeping operating costs. So, in other words speaking, they aren't trying to win every benchmark, they are trying to win on accessibility. So, if we take a look at this chart they're giving out, like writing tasks, okay, Agnes AI sitting at number one, comprehension tasks as well. But like when it comes to complex and synthesis stuff tasks, maybe not so much. And honestly, we are already seeing something similar happen with DeepSeek. DeepSeek shocked the AI world by showing the lower cost models could still compete with the biggest players. Now, Agnes is taking the idea one step further, not lower cost, but zero cost. Here's where the story gets even more interesting. So, the founder actually he believes AI models themselves are becoming commodities. So think about what happened to cloud storage. At first, it was special, then everyone had it. Eventually, the price dropped. The real value moved somewhere else. The same thing could happen with AI. Think about it. Like if every company eventually has access to powerful models, then maybe the real winners won't be the model creators. Maybe the winners will be the companies building useful products on top of these models. And that's why Agnes is putting a lot of focus on AI agents. So AI agents are systems that can actually perform tasks for you. So pushing that button, writing code, doing research, running business, and making decisions. Many people in the industry believe AI agents could become a much bigger market than chatbots themselves because users don't just want answers anymore. What they want is results. And that's exactly where the next wave of competition might happen. So, for investors, why this really caught my attention for the zero cost aspect. But like the biggest takeaway isn't whether Agnes will succeed or fail. The biggest takeaway is what it says about the AI industry. We are starting to see a shift here. The conversation is moving away from who has the smartest AI model and toward who can build the most useful ecosystem. If AI models become cheaper and more widely available, then the next trillion-dollar companies might not be the model builders. They might be the companies building applications, agents, and businesses on top of them. And that's exactly the future Agnes AI is betting on. All right, so let's talk about Bitcoin right now. So we have been talking so much about AI in today's live show, but we have to talk about Bitcoin because something very interesting happened over the weekend. This actually, yeah, it happened yesterday. So on 8th of June, there is a post by Bitcoin Treasury. So Michael Saylor bought some additional Bitcoin. So Bitcoin's recent drop has sparked a new round of criticism aimed at Michael Saylor and MicroStrategy. Last week, MicroStrategy disclosed it sold 32 BTC. Now Strategy buys an additional, so wait for it, 1,550 BTC and now holds a total of 845,000 BTC. So 32 BTC is basically rounding error. But because it was the company's first known Bitcoin sale after years of non-stop buying, it immediately grabbed headlines. And some people blame Michael Saylor for Bitcoin's recent weakness. One of them was, wait for it. So one of them was the former hedge fund manager and CNBC host, so Jim Cramer. He posted on X exactly last Friday. He's saying Michael Saylor murdered Bitcoin. Well, not exactly subtle. And wait for it, like someone replied underneath Jim Cramer's post. So Michael Saylor responded the way only Michael Saylor can, with a joke. So he replied, "It's just a flash wound, Jim." So very classic Michael Saylor, but behind the jokes, there was a much deeper and much bigger debate happening. Was this the beginning of MicroStrategy?
And so I think he just had to.
Or was the market overreacting it? So not everyone saw the sale as bearish. So right now we have the Stripe CEO Matt Cole offer a very different perspective. So let's actually play a clip right now and take a listen.
Message that I'm willing to do this, and that willingness to do that was always going to come with the critics saying, "Oh, this is the tip of the iceberg. First it's 32, next it's going to be 3,200." But your goal should be maximizing total returns. Bitcoin's your hurdle rate, but ultimately the goal is you want to maximize the total returns for your common equity shareholders, and to not have selling Bitcoin on the table when it might be advantageous, I think is not the optimal way to do that. And so selling 32, I think it clearly shocked the market. And I think just the fact that a 32 Bitcoin sell would shock the market, I think shows me that he had to do this to get to the point where they can operate maximizing total returns into the future. And with Bitcoin down, there's potential that, just from a tax loss harvesting perspective, that more, Bitcoin sells might make sense. But what's most important there is that I think he's going to be a net buyer of Bitcoin effectively every single month into the future. And so if he did a tax loss harvest transaction and sold 50,000 Bitcoin, and then the next day he buys back 50,000 Bitcoin, or even the next hour he buys back 50,000 Bitcoin, I think that shareholders should be thankful for that, because it actually helps them put themselves in a better long-term position.
First, folks, so this is how I understand it. The sale wasn't about MicroStrategy giving up on Bitcoin. Management previously explained that small sales could be used for things like dividend payouts or corporate purposes. In fact, MicroStrategy executives have repeatedly said they are not married to the idea of never selling. Their actual goal is quite simple: increase Bitcoin per share over time. That's the metric they care about. And that's very different from saying they will never sell a single coin. So then something interesting happened over the weekend. So Michael Saylor posted his very famous Bitcoin tracker, so the orange dot, and then the same chart he usually posts before announcing a new purchase. And his message was quite simple: it is a good time to add more dots. For long-term Bitcoin investors, that's basically Michael Saylor saying, "Okay, we are buying right now." At the same time, MicroStrategy CEO reinforced the company's position. So he said, "Our corporate strategy is to increase net Bitcoin and Bitcoin per share over time." And he added, "Rumors otherwise are just rumors." So, and sure enough, today, or actually yesterday, so 8th of June, we got the answer from Michael Saylor. So MicroStrategy announced its purchase another 1,550 BTC. The company spent approximately $101 million on purchase. That brings total holdings to roughly 845,000 BTC. Not only that, Strategy also increased its dollar reserves. The company now holds about $1 billion in cash reserves. So while critics were accusing Michael Saylor of killing Bitcoin, MicroStrategy was quietly buying more Bitcoin yet again. So the real story here isn't the sale of 32 BTC last week. The real story is how quickly the market jumped to conclusions. People saw a tiny sale and immediately assumed MicroStrategy was abandoning Bitcoin. A few days later, MicroStrategy bought another $100 million worth. That's why investors should focus on actions, not headlines. And if there is one thing Michael Saylor has been consistent about for quite a few years, is this: when Bitcoin falls, he usually buys more. As MicroStrategy CEO, how he put it, he said buying Bitcoin is easier than selling. And based on yesterday's announcement, they seem to be sticking to their playbook, which I like. All right, so that's pretty much all the news I want to cover in today's segment. But before you go, make sure to give us a follow on X. So my X is championcrypto_IO. So make sure to give us a follow there. Make sure to follow Roxham TV on X as well, because we have regular news coming out on a regular basis, hourly basis, not just about Bitcoin, but of course AI. And we have prominent guests sharing their takes, their expertise on the channel. So point being, there is so much valuable content you probably do not want to miss out. So make sure to follow us on X and subscribe on YouTube if you haven't already. As always, my shows are here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So being Jam Crypto channel and also Roxham TV YouTube channel. Thank you guys for watching. I hope you guys have a great day and see you guys in tomorrow's show.